Welcome to Bloomberg Technology. I'm Emily Chang in San Francisco. The record-breaking rally continuing for U.S. stocks, with the S&P 500 reaching an all-time high for a fifth day. This all happening after Fed Chair Jay Powell reiterated that the Federal Reserve will remain accommodative. And it is the last day of the Republican National Convention. President Trump speaks tonight. Don't miss our live coverage on Bloomberg Television starting at 9 p.m. Eastern Time. Meantime, along the Gulf of Mexico, the Texas-Louisiana border is reeling after Hurricane Laura unleashed a wide swath of destruction, with winds reaching 150 miles an hour after coming ashore overnight. It is now churning over Louisiana. The storm could lead to more than $15 billion in insured losses. One of the top talkers on Wall Street today, meantime, news that Walmart has joined Microsoft in making a joint bid for the social media sensation TikTok, now vying with Oracle. For more on how these stories and more impacted the markets, I want to get to our Scarlet Fu, who is in New York and watched the ups and downs of the day. Obviously, a lot tied to these remarks from the Fed. Scarlet, walk us through the day.
Absolutely. There was a lot of gyrations following Jay Powell's remarks. But once again, the Fed moves the markets. And in the case of equities, moving it higher. The dollar also moving higher. Bonds falling. That pushed up yields. Jay Powell signaling that the central bank is in no rush to raise interest rates. And in fact, it'll let the job market run hotter and inflation run higher, including potentially overshooting that 2% target before taking any kind of action. So in the end, we saw financials get a big boost because they benefit from higher yields and a steepening yield curve. In fact, all 24 members of the KBW Bank Index finished up. Now, one thing I do want to point out is that Abbott Laboratories was one of the best performers. It climbed 8% to a new high as the government is set to buy all of Abbott's 15-minute COVID tests made this year. President Trump is supposedly going to formally announce this deal when he speaks at the Republican National Convention tonight as he accepts the nomination. Emily?
Scarlett, I do want to move on to Hurricane Laura, and of course it'll be interesting to see if the president addresses the extreme weather that we've been seeing across the country. Thankfully, the hurricane lost some steam, but still battering the Gulf Coast. Any impact on assets there?
Yeah, the commodity prices tied to Hurricane Laura moved lower. So the storm plowed through Louisiana, made landfall there, caused a lot of devastation, but it largely spared Texas. And so when you look at cotton prices, they came off a 6-month high. Texas is the country's leading producer of cotton, accounting for 30% of production. Oil prices also declining by 0.9%. Refineries avoided widespread disruption. Sure, some of them lost power, but it wasn't the kind of damage that it could have been had the storm really hit Texas head on. I also want to mention, Emily, what's happening with TikTok. I know you highlighted it earlier, but the pursuit there is getting a lot more crowded. Walmart is now teaming up with Microsoft, and the rationale here is that Walmart wants to expand its online marketplace unit and its advertising business, and supposedly TikTok would help Walmart grow those two units. Oracle, meantime, of course, is a bidder as well. Its bid reportedly includes $20 billion in stock and cash and 50% of annual TikTok profit to flow back to ByteDance, the Chinese parent, for 2 years. I know you are all over this, and you're going to get to this shortly.
Absolutely, Scarlett. We're talking about it right now. Thank you so much for giving us that update. As Scarlett mentioned, the plot thickening with TikTok. The other big news today is that the CEO of TikTok, Kevin Mayer, who just joined the company a couple of months ago, is stepping down as this bidding war heats up. Kevin Mayer, a huge high-profile executive that came to TikTok from Disney, stepping down from the job. Meantime, Microsoft and Walmart joining forces to compete with Oracle's bid for the social media giant. Joining us now to talk more about this, Bloomberg's Kurt Wagner. So, Kurt, first of all, let's start with Kevin Mayer. You know, a surprise exit there. You can imagine this was maybe him thinking this was his dream job on top of the world, and suddenly he's leaving. What did he say about why?
Yeah, he had to understand when he took the job that he would probably be dealing a lot with U.S.-China relations. I don't think that anyone expected that he would be in this position. You know, it was really interesting. I've been thinking about this now for a few weeks. He has really two jobs. He's the COO of ByteDance and the CEO of Global TikTok. So when you start to talk about spinning off the U.S. business, it really puts him in a weird spot, because who does he stay with, right? Does he go to Microsoft or does he stay with ByteDance? So ultimately, he pointed to these changing political landscape as one of the main reasons that he is stepping aside. But I have to imagine that for someone who was almost the CEO of Disney, getting half your job taken away based on any deal was probably a pretty big change for him.
Tell us about the woman who is filling that position in the meantime, Vanessa Pappas, who's been running TikTok's prized international business.
Yeah, so Vanessa has been at TikTok for a while now, and she was basically running the U.S. business before Kevin joined the company. She's based in Los Angeles, and it was always kind of assumed that someone would be coming in, in Kevin's role to take over more broadly. But Vanessa has been there. She's someone who understands the business, so she's someone that employees already know. So clearly, it's a good kind of person to have in the interim. It's unclear if they're going to officially, look for someone to take over the role Kevin had. Obviously, a lot of that will be sorted out based on who ultimately buys TikTok.
Right, and this could be a matter of hours before it could be just a matter of hours before we know how this deal plays out. Walmart and Microsoft teaming up versus Oracle. What is the latest?
Yeah, it's going to come soon, we're told. Could happen in the next week for sure, maybe even the next couple days. As you mentioned, Walmart and Microsoft are now a team suddenly. That was a bit of a surprise. Walmart's name has not been tossed around much. I'm told that it sounds like both companies would have some type of equity in this new TikTok venture, but that probably Microsoft would be a larger shareholder. But the idea being that now you have two American companies, both very obviously well-established, very large, that are kind of teaming up to do this. You have Walmart that might be able to bring some e-commerce business to TikTok. You have Microsoft, of course, with all of their technological advancements and their ability to kind of handle the data side of things. So I think they see this as a real team effort that might sway the White House and President Trump, who's obviously also considering a rival bid from Oracle.
Right. All right. Well, lots to discuss, lots to continue to watch. Kurt, I know you're going to be very busy over the next 24 to 48 hours. Thank you so much for giving us that update. We'll check back in with you later. Thanks so much, Bloomberg's Kurt Wagner there, continuing to cover the TikTok story. Coming up, we're going to talk about the changes in retail and e-commerce as the pandemic drags on. The CEO of Visa will join us in an exclusive conversation to talk about how tech is impacting payments at this time, including the rise of contactless. That's next. This is Bloomberg. The pandemic has accelerated potentially years of progress in financial technology in payments into the span of just a few months. And some of these new trends are possibly here to stay. Joining us now to discuss, we've got the CEO of Visa, Al Kelly, here with us today for an exclusive interview. Al, thank you so much for joining us. Obviously, Visa has such a unique view into the health of the U.S. consumer right now, the health of the U.S. economy. On one hand, you've seen an explosion in e-commerce, but also tens of millions of people who've lost their jobs, and we're in the middle of a recession. What are the trends you're seeing in U.S. consumer spend, and what are those trends telling you?
Well, first of all, Emily, it's great to be with you again. You know, the state of the consumer in the U.S. is, in fact, mixed between unemployment and the fact that we see travel, categories like travel being severely depressed. And a lot of businesses are not back at 100% capacity, which is challenging for those businesses and in turn for the consumers that utilize those businesses. On the other hand, though, we have seen really almost a V-shaped recovery in consumer spending since the low point in the middle of April. And that's been driven by a combination of e-commerce and debit card use. And then there's been certain categories like food and drug where people have been, basically hoarding paper products and obviously shopping at supermarkets as opposed to going out to restaurants. So we've seen incredible growth in those categories. So and I would also say that the stimulus money, Emily, has played a pretty critical role between the federal stimulus money, the unemployment checks that people have gotten. We've seen a lot of that drive some of the spending increases and some of the recovery. But it truly is mixed because we'll have to see where unemployment goes and whether some of these businesses like restaurants can open at full capacity.
Now, just like work from home has accelerated some technological shifts that would happen in terms of productivity, you're also seeing some technological shifts happening when it comes to payments. What are the shifts that you're seeing on your end that, could potentially be here to stay?
Well, the single biggest is the adoption of e-commerce, and there's been a tremendous amount of first-time activators in e-commerce over the course of this 25 or so week period of COVID-19 descending upon the United States. A lot of people shopping in various new categories. A lot of people doing an online payment and then going to pick up the item at a store or at a restaurant. We've seen a tremendous impact in increase in people ordering food online and then going to pick it up in person. We've also seen the contactless use go up tremendously. People are concerned about currency being something that can carry germs. And we still have $18 trillion spent on cash and check in the world, and we're seeing incredible adoption of contactless. Now, outside the United States, nearly 2/3 of face-to-face transactions are tap to pay. And during the pandemic, we worked with 55 different governments around the world where they actually raised their limits in terms of the amount of a transaction that would be allowed to be utilized in tap to pay. And that's driven a tremendous amount of volume. So tap to pay is here to stay. And, but for the US, which is behind.
Right. The U.S. is pretty dramatically behind other countries when it comes to contactless payments. How far behind and how long before we catch up? I mean, this can have huge consequences, especially in a pandemic when that technology is very, very useful.
Interestingly, from the beginning, the U.S. has been behind, but it is making great strides, particularly in the last year or so, and particularly even more particularly in this last 6 months of the pandemic. We now have seen 80 million new cards be put in the marketplace in the first 6 months of this year that are enabled for tap to pay. And we expect by the end of the year to have 300 million cards in the marketplace. And that's out of a little less than probably about 1 billion cards in the US. 85 of the top 100, 255 of the top 300 sellers are already enabled for tap to pay. And 9 of the 10 top banks in the United States are pushing it. So today we're probably in the mid-single digit range. And that's kind of where everybody else started out. But it starts to take off once you kind of get to about a 10% level. It really starts to take off, and you can start to see 3 to 5 percentage points increase each quarter. So I expect the U.S. to play pretty fast catch up here, driven in part by the pandemic.
Meantime, Visa was rolling out tap to pay across New York City buses and subways. But of course, since the pandemic hit, you've got the transit system in dire financial straits. I imagine it's the same in other cities. Could that technology be on the top chopping block if mass transit is bound to rebound more slowly than every other industry potentially? Is that one place where this technology moves more slowly?
I don't think so. The reality is that this is generally a very positive thing for transit authorities. Obviously, transit authorities have been hammered now with very few people actually going to work and fear that you can't socially distance in a subway or bus or a train. But where we had put it in place, and we were in discussions or in place with probably 250 different transit authorities around the world, people were finding it to be convenient. It takes the transit authority out of the business of having to create their own cards. This is a much better arrangement for organizations like the MTA, but clearly the MTA has lots of challenges because of ridership being down. But look, I expect all of this to return to some form of normal at some point. It's just a matter of when that's going to be. But it's certainly depressing the number of transactions we're seeing that happen when people commute to work every day. But a lot of that's being made up by people staying home and getting on their computer or their iPad and shopping via e-commerce.
Now, as you mentioned earlier, the U.S. has had a thriving cash economy, and it's still sometimes baffles me how many people still pay with cash. Do you think that changes post-COVID? Do we see a lot less cash changing hands, or do old habits just take too long to die?
Well, we're seeing some of it already. I have probably seen I haven't been out a tremendous amount myself. I've tried to be careful, but I've seen a number of merchants actually have signs up that they will only take cash. I know when getting takeout food, people don't want to accept cash. You've got to either do it online on their website or on the phone, give them a card number. They won't accept cash. And so I'm already seeing a fairly big shift. And I think that shift will be much more of a permanent shift as people get both concerned on one hand about whether cash that trades hands multiple times a day can be the source of germs, but also people are realizing it's quite easy, in fact, easier to do a digital payment and not have to worry about carrying cash or having enough cash.
Interesting. Now, Visa was a major sponsor for the Olympics, the FIFA World Cup, obviously professional sports, many huge sporting events not happening as planned, some of them slowly starting to come back in fits and starts. How big a setback is that in terms of marketing, advertising, and sponsorship opportunities?
Well, it's certainly a setback. Look, sports are one of the great uniters of people around the world. And we at Visa have only sponsored these big global entities, the NFL, the FIFA World Cup, and the Olympics. So it's certainly disappointing for them and disappointing for us and other sponsors that we can't leverage that asset at this particular point in time. But certainly safety of consumers and citizens comes first. The other reality is, though, regardless, we would be cutting back on our marketing at a time like this anyway, because there's not a lot, people are going to spend what they have to spend, but there's not a lot of discretionary spend going on, very little travel going on. So we would probably naturally be cutting back on our marketing anyway. So the fact that we're not doing the marketing through these sponsorships as much is
Okay.
probably an okay aspect of things at this point.
All right, Al, thank you so much for joining us. Really interesting to see your view on all of these trends, given that unique perspective that Visa has. Al Kelly, Chair and CEO of Visa, thank you so much for joining us. We'll be right back with more of Bloomberg Technology after this quick break. U.S. Commerce Secretary Wilbur Ross says China's decision not to block travel to the U.S. during the outbreak was deliberate. Speaking with Bloomberg's David Weston in an exclusive interview, take a listen to what he had to say.
Well, in terms of China, a lot has been accomplished. On the enforcement side, we really have been enforcing quite vigorously. You're familiar with the actions we've taken on Huawei. You're familiar with the actions that we've taken on ZTE, two major telecom companies. Most recently, we've been working very hard on the semiconductor part of things, because while China does have technology, we still have the best software design and the best fabrication equipment for semiconductors. So we're trying to avoid them taking unfair advantage of our technology. Technology is really important because while protecting things like steel and aluminum help take care of today's world, technology is tomorrow's world. So that's a big deal. Very recently, we put on the entity list of 500 companies since 2017. Awful lot of those are Chinese companies, and that's because they are the ones that seem to be doing the most to violate sanctions, to violate human rights, and most recently also to create problems in Hong Kong. So that's been a big, big series. And then, of course, you have the tariffs. the Section 301 tariffs that USTR imposed on China. So the cumulative effect of all this is enormously greater than the long-term cumulative effect of everything that had been done pre-Trump.
So, Mr. Secretary, speaking of China and technology for the moment, we have the TikTok issue that is pending, as I understand it.
Yes.
And there are various companies now who have expressed an interest. I'm told Microsoft, Walmart, and Oracle have all expressed an interest. As you look at these possible alternatives, what are the criteria you use in deciding which, if any, of these make sense from the U.S.'s point of view?
Well, the fundamental idea is that we don't want detailed personal information on all of our teenage children who are the main users of TikTok. We don't want that information to become part of a big Chinese database to use to infiltrate our country. So that's the principal objective. Whether it should be Microsoft or Oracle or someone else, that's really more for the private sector to decide. The TikTok people are essentially operating in the U.S. and a couple of other non-Chinese countries. TikTok, as I understand it, does not really operate in China. So there'll be no particular impact on Chinese apps as a result of whatever we do with TikTok. My own personal preference would be to have TikTok acquired by one of these American companies. And I think that would have the fringe benefit not only of helping from a national security point of view, but creating more competition in the areas of Facebook and social media. That's a healthy thing. Competition is a very good thing. That's kind of what makes American industry thrive.
U.S. Commerce Secretary Wilbur Ross there. Coming up, a series of extreme weather events happening across the U.S. in different regions over just a matter of weeks. Coincidence or no? We're going to hear from a Stanford expert on climate next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco as Hurricane Laura battered the southern Gulf Coast with nearly 150-mile-an-hour winds and water levels rising almost 10 feet above normal this morning. Wildfires continued to burn in California, raging across more than 1 million acres. In other parts of the country, storms in the Midwest and New York darkened several homes. Those are just some of the extreme weather conditions testing our country this month. Are they all part of the same crisis? We're joined now by Michael Wara, director of the Climate and Energy Policy Program at Stanford University. Michael, thank you so much for joining us. You are in California, where I am, and you've been experiencing some of the bad air tied to these fires in Northern California. Are all of these extreme weather events related somehow, or is this a coincidence that all of this is happening at the same time?
Well, thanks for having me on. I think the thing to say about this is that the effect of climate change is to increase the odds of any of these weather events happening. And what we're seeing this summer is a coincidence of multiple bad outcomes occurring at the same time. That was a much less unlikely thing prior to emissions of greenhouse gases. But as the planet warms, we're likely to see all of these kinds of events happening more, and that means the odds of a coincidence go up substantially, the odds of what's happening right now, where we're seeing different weather-related catastrophes across the United States.
So let's start with the fires. What do climatologists think will happen in California? It certainly seems anecdotally that fire season gets worse every year. What happens going forward to California's climate? Do we get more rain even if we get hotter?
Well, actually the most dangerous part of fire season is yet to come. in California. It's the late fall, and the science that's been done to date suggests that we're more likely to experience hot, dry falls like the ones we've had over the last few years that have been so catastrophic. So that means we need to be better prepared. We need to have better suppression forces, firefighters, but also we need to learn how to live with fire more effectively. Do the things we need to do ahead of time to keep people safe and communities safe. But I think
what about
the
with
long-term
hurricanes? The
future
most
is
recent
that,
research. Go ahead.
I say the long-term future is that this is also not a problem there's not a new normal coming, right? What we're entering into right now is a phase of constant change and probably worsening of some of these problems. And that's what's particularly challenging. Even if we're prepared for today, that doesn't mean we're prepared for tomorrow, next year, a decade hence.
What about with hurricanes? Some of the research we've been looking at shows that hurricanes are increasing in intensity in the Atlantic, but that is not so in other oceans. Does that jive with what you're seeing, and what is to come?
Well, the science around climate change impacts on hurricanes is complex, and hurricanes themselves are devilishly complex. But there does seem to be evidence that a warming ocean and a warming atmosphere that can hold more water vapor does, in the net, result in stronger hurricanes. Especially the kinds of phenomena that we've observed, rapid intensification. And so, whether there are more or fewer landfalling hurricanes, I think is a more complex question, but it does seem as if, as we add energy to the atmosphere, the hurricanes that we experience are becoming more energetic, like Hurricane Laura that just came ashore. So, again, I think this is a situation where we're just really beginning to observe the impacts of a century's worth of greenhouse gas emissions. But that shouldn't give us any sense of confidence about what is coming and whether we are prepared to manage the future changes that are going to occur, right? We're observing about a degree to a degree plus of warming right now, and on our way to 2 degrees. And this is what we're getting. So I think it really raises concerns about what may happen if we aren't able to transition toward cleaner energy, approaches to providing all the goods and services that we need to live in a modern, wealthy society without emitting greenhouse gases. Because, like I said, this problem, the kinds of coincidences that we're experiencing in the U.S. are going to become even more challenging. That is a consistent message from the science. If we allow the planet if we fail to take action to prevent the planet from warming even more than it already has.
That certainly sounds very ominous, and in line with what Bill Gates told us a couple of weeks ago, that he believes that climate change could be the disaster that's worse than COVID. Michael Wara of Stanford University, thank you so much for joining us. Really appreciate your expertise on this. We'll obviously continue to follow these weather events as they play out. Okay, coming up, more on how Silicon Valley is responding to the Black Lives Matter movement and working to increase diversity across the board. Is it working? We'll discuss next. This is Bloomberg. In the wake of racial justice protests happening across the United States, most recently in response to the shooting of an unarmed black man, yet another unarmed black man, Jacob Blake in Wisconsin, the racial makeup of companies and venture capital firms is getting a closer look as they face increasing scrutiny over diversity in their ranks. Joining us to discuss, Chantal Garvey of Reach Capital, venture capitalists in an industry where there are very few women and black women venture capitalists. Chantal, great to have you with us, especially on a day like today. You're seeing just these protests reignite across the country. Obviously, a really somber and challenging moment, especially for the family of Jacob Blake. What is going through your mind right now, given that this is sadly a movie that we have seen far too many times in this country?
As you said, there's just been too many examples of racial injustice happening across this country. And the recent shooting of Jacob Blake and the subsequent NBA boycott is just proving that these issues are not going away. And it's forcing us as a society to really take a hard look at how we make change across various industries. And as you mentioned, here in Silicon Valley, just less than 4% of venture capital is Black or African American. So our Black founders are not getting the investment at the same rate as their white counterparts.
My colleague Nico Grant wrote an incredible story in which you took part, where he talked about the quiet racism of Silicon Valley. And I'm curious if that description matches up with your experience. Do you feel that Silicon Valley is struggling with racism, but in a quiet way, where maybe it hasn't quite faced up to the fact that this is a problem here?
So as context, I'm one of very few Black venture capitalists and even fewer Black women venture capitalists. So I feel we're really a responsibility to ensure that the Black community shares in the wealth creation, the wealth that is created by the VC and startup community. And what Nico's article really highlighted is the shared responsibility that we feel as Black VCs. And all of us are doing work to make change, but we're not seeing enough progress. And we feel that more work can be done. So I'm doing more on a personal level, and we're doing more on a fund level at my fund at Reach Capital. So we've taken the following 3 steps. Number 1, we've made it critically important that we hire a very diverse team so that we can have diverse networks and reach out to a diverse set of founders. Number 2, you can't change what you don't measure. So we're tracking at the founder level our pipeline and trying to understand the different types of founders we're investing in and maybe the biases that we do have. And number 3, we're asking ourselves the tough questions. What is it about our processes that may be preventing us from investing in more Black founders? And I think if all VC firms just took these 3 steps, that would go a long way in really addressing what you called this quiet racism.
Your focus at Reach Capital is education, technology. Obviously, this country is going through a crisis right now. Schools are remote. There's a huge concern that this will disproportionately affect Black and brown communities and children who don't have access to technology. How is that influencing your investment focus? Where are you looking to put your money right now, given the situation that we're in?
Yeah, so at Reach, we believe massive global businesses will be built at the intersection of education and technology, and now more than ever. And equity is at the forefront of what we invest in. And we're investing in solutions that empower parents, educators, and learners across the entire spectrum, from early childhood all the way through workforce development. So right now, we're in a tremendous moment. There's massive opportunity as this pandemic is unfolding. And what we're seeing is that families are really stepping up and participating in their children's learning. They're spending more of their discretionary income on educational tools and services. And we're working with our companies to make sure that these tools and services reach all families. So for example, we have a company, OutSchool. They are a marketplace of live online classes to support learners and their families. We've seen tremendous growth with them. They've grew their bookings over 10x over the past couple months, for example.
So how do you think, what's next? I mean, it sounds like you have a more positive outlook on virtual learning than perhaps some of us parents had at the beginning of this. And I agree things are getting better, having to also take a much more active role in my kids' learning. But do you think there will be a significant learning gap, and will we feel the impact of that for years to come? Or is this going to be a blip?
So we already know that there's going to be some tremendous learning loss as a result of this pandemic. Not only will there be academic learning loss, we also know that there's going to be tremendous impacts to both teacher and student mental health and well-being. Again, this is an opportunity for our companies and technology to step up to meet these learning challenges. And schools and districts right now are desperate for tools to help support them in these times. So I am optimistic that yes, we will get through this moment, but this will be a transformational change for the industry to really support these learning gaps and really support teachers and students through this moment.
All right. Chantal Garvey of Reach Capital, thank you so much for joining us and sharing our story, and for the hard work that you're doing to help change the industry and the education world for the better. Appreciate you joining us. Thank you so much for being with us today. All right, coming up, protesters have swarmed Amazon CEO Jeff Bezos' house in Washington, D.C. They're calling for an increase in wages. We're going to speak to one of those protesters coming up next. This is Bloomberg. Welcome back to Bloomberg Technology. Turning now to a protest that's been happening outside of Jeff Bezos' house in Washington, D.C., a demonstration calling attention to Amazon workers' wages. Organizers want the company to raise the minimum wage from $15 to $30 an hour. We've been watching images of it playing out on social media throughout the afternoon. The protest coming a day after Bezos' net worth exceeded $200 billion for the very first time, making him one of the richest people, not just in the world, but in history. The protest has been led by the former Amazon warehouse worker and Amazon critic, Chris Smalls. Chris joins us on the phone right now. So, Chris, talk to us about what you are calling for today.
Absolutely. We're absolutely calling for that 1% wealth tax on all these billionaires, especially Jeff Bezos. It's a shame that half the country is unemployed right now, 40 million people out of work. You have another abundance of millions that are going to be facing evictions. And these billionaires control all the wealth and power. So we're calling for a wealth tax. We're calling for a decent pay, living wage. $15 an hour is not enough. You know, it's not fair as an essential worker that we're trickling all these trillions of dollars for these companies, and we're not receiving anything on the back end. We want it up front. So $30,000 minimum, free child care for parents, Medicare for all. That's one thing that these companies should provide as well. And PPE, personal protective equipment at all times. Our demands just continue to grow as we continue to deal with this pandemic.
Now, we did reach out to Amazon for a statement. A spokesperson didn't immediately respond to a request for comment, but watching these images on social media, I mean, they're quite dramatic. It looks like you pulled a guillotine in front of Bezos' house. Why do you feel that is necessary to get his attention?
It's a statement. You know, these are workers that I've flown in today. There's some that came all the way from Jacksonville, Florida. Some from California, some from Ohio, all over the country, Milwaukee, New York, New Jersey. We all came here because we want to continue to advocate on what we've been advocating when I got terminated back in March. Nothing has changed. So we want to let people know the truth, the reality of the situation. That prop, the guillotine, it's just to show that we are coming and we are not giving up in our fight. It's not to kill somebody physically. It's a statement. It's a statement as we want to make sure that we get a tax implemented with the Congress, with these politicians that we put in office. It's a way of applying pressure from different angles, and it's a direct statement from the working class. We want to make sure that the rich understand that if we're working for you as essential workers and you're not taking care of us, we're coming for you, and we're going to try to continue to fight for that.
You were on the show just minutes after you got fired, which was on the end of another protest that you were leading. You've been certainly outspoken about workers' rights and the experience of Amazon workers in the warehouses. Things seem to have slowed down since then, but I'm curious what's gone on between then and now, since the early days when COVID was really bad and really having a dire impact on the warehouses. What have we sort of missed since then?
Well, obviously that's what happens when, with the media, you have a large surge in the beginning and then things just seem to trickle and fade away. And Amazon has the ability to buy up a lot of media and PR campaigns. I've seen it. I know everybody has witnessed all these ads that's been coming out and commercials in direct response to what I've done. That's how they drown out the noise. That's a part of their smear campaign that also was a part of their leaked memo that came out about me. This is that people have to realize. The $4 billion that Amazon kept claiming that they're using to protect workers, it wasn't to use to protect workers. It was used to spin the media and direct the public in their opinion that's positive for the company and Jeff Bezos. But that's not the reality of the situation. This is the reason why throughout the last 5 months, I've still been active, organizing with workers, talking to workers from all over the country, and speaking out about these issues so that we stay relevant and stay on top of the fact that we're not protected. I'm still getting emails every single day from workers telling me their horrible experiences from Amazon, how Amazon has done some horrible things to working people. We're talking about disputing unemployment claims. Single mothers of 3 kids, I had to appoint an attorney to fight against this juggernaut company because they came for back unemployment pay in the middle of a pandemic. These are stories that people don't know about, and that this rich man in the world, this man that makes $13 billion a day, is doing to working class people. It's a shame, and we're not going to stop until we demand and get better.
Now, in 2018, when Amazon increased the minimum wage to $15, Jeff Bezos said, "We listened to our critics, thought hard about what we wanted to do, and decided we want to lead. We're excited about this change and encourage our competitors and other large employers to join us." You're standing in front of his house. What would you say to Jeff Bezos directly if you had an opportunity to speak to him face to face?
Absolutely. He's not fooling anybody. Jeff is not fooling anybody. The $15 an hour, yes, they did raise it, but they also took away the fact that we were shareholders at one point, the workers. When I came in with the company, I was making $12.75. So the $15 is an extra $3. In 2020, we're talking about 5 years later. That's ridiculous. There's no way we're going to fall for that tactic. They gave us $15 an hour, but they took away our monthly bonuses. They took away our VCP, and they took away our stocks. We had to buy into our shares after that. So they give it and they take it. The same thing you've seen throughout the duration of the pandemic. They gave us $2 hero pay, and they took it away on June 30th. And this pandemic is still going. We got to remember, we're still in the midst of this pandemic. It hasn't gone anywhere. These cases are still rising in these buildings, even though they're not getting as much media attention. We still work hand in hand with Jonna Jump, who's been keeping track. And these cases have grown to almost 3,000 cases nationwide. So for you, sir, Jeff Bezos, we're telling you right now, here and now, that we will not stop advocating. We're going to continue speaking truth to power. We're going to continue fighting for our demands. And if you don't want to give it to us, we will take it one way or another. We're going to continue advocating for it together. Collective is never going to be Amazon versus Chris Smalls. It's going to be Amazon versus the people, and that is all of us. And today was a demonstration of different type of people from all different backgrounds speaking up on their stories and their experiences in life, and not just with Amazon, with all essential workers.
Chris Smalls leading that protest today in front of Jeff Bezos' home in Washington, D.C. Former Amazon warehouse worker Chris Smalls there. Chris, thank you so much for joining us again. We did reach out to Amazon for a comment. We didn't immediately get a response, but we'll continue to effort that. It is the last day of the Republican National Convention. Do not miss our coverage tonight live on Bloomberg Television. We'll see President Trump officially accepting the nomination. Our live coverage starts 9 p.m. Eastern Time. That's all for Bloomberg Technology. Stay tuned for Bloomberg Daybreak Australia. I'm Emily Chang. This is Bloomberg.